Hello and welcome to this Tuesday's morning market briefing. We've got a lot to talk about, but firstly, Bitcoin's price does surge above that $42,000 mark as rate cut bets fuel cross-asset rally, as well as that the US funding for Ukraine is set to run out by the end of this year. The White House does warn, but we've got lots to talk about in the charts. Also, with lots happening on the economic calendar, we'll come to that near the end, so make sure you stay around so you see that. Before we get straight into it, make sure you subscribe. But the first article to talk about, of course, is Bitcoin surging to that 42,000 mark. Now, Bitcoin surged to its highest price rally, to its highest price in nearly 20 months, while gold hit an all-time peak. And this comes as investors speculate interest rates will fall earlier than expected next year. Now, we've been covering Bitcoin and gold quite extensively, more so on the charts, which obviously we will come to near the end. But on Bitcoin and gold, we have been seeing that increased bullish momentum over the past month or two. And as mentioned, this can largely be put down for gold in relation to global tensions, as we've seen with, the Israel and Gaza conflict, heating up and, turning into something very, very serious. And therefore, now we're seeing, the escalations of that become something that's further, outside of Israel's borders, something which now involves the Houthis, a Shia militia group based in Yemen, which is now targeting carrier ships and that sort of thing. And the potential, of course, for this conflict to become one which is regional, obviously, is creating this kind of concern within markets, which is why we're now seeing money flow into gold as a safe haven asset. As for Bitcoin, however, as we'll come to in this article, more importantly, we've been seeing, the kind of increased speculation for a Bitcoin ETF to be approved by, the SEC's kind of ruling. As well as that, we have been seeing kind of Bitcoin and other kind of cryptocurrencies be weighed down most recently as a result of criminal court proceedings, and the most important and most notable of those being Sam Bankman-Fried's, where he was the owner of FTX and now he's being pursued for, allegations in relation to fraud, in essence, to do with that business. And so now we're kind of coming out of that era. We are seeing kind of this Bitcoin momentum surge, and so we'll talk about that now, with Bitcoin soaring to more than $42,000, also following optimism that the toughest regulatory punishments for the industry have passed, and that's what we were just talking about. But gold also rallied on Monday, making a new record high at the $2,135 mark, and that is very, very significant. And as we'll come to on the charts at the end, we've been following gold quite extensively, and many people didn't think that gold would have kind of the momentum that it does at the moment until we came into contact with another large war in relation to Israel and Gaza, and this was on top of the conflict within Ukraine already. And then we had a change in heart by the Fed, or at least change in speculation in relation to the Fed, where previously many had expected the Fed to actually quite possibly raise interest rates by 0.25% by the end of this year. However, now we're already talking about rate cuts, and so this dramatic change in kind of the monetary policy outlook has driven gold higher, as people often take their money out of the dollar when they're expecting higher inflation or lower interest rates, and they put that into something like gold, which ends up driving gold to the upside in scenarios like we're experiencing at the moment, where global tensions are high, but kind of ability to keep your money within the dollar is reducing in its kind of potential or quality. Now, expectations are now growing that the Fed will cut rates soon, despite Powell's comments last Friday that it was premature to conclude that central banks have won with inflation. This is what we've been hearing from Powell a lot, is this kind of cautionary position in relation to inflation rate, in relation to all economic data that we've been receiving most recently, with him being, sure on this kind of comment around, let's wait until we get the majority of the data, then we can decide what to do with inflation further, whether we should cut interest rates, keep them where they're at, because not too long ago, as I just mentioned, rates were, expected by some to go up still for the dollar. And, people have been expecting rates to stay higher for longer, with that being the really big kind of conclusion to the Jackson Hole meeting some time ago now. And so this is why it's so important to keep your eyes on, and it's why we often return to geopolitics and cover these kind of less finance type news articles, because they affect the markets so much, with it affecting gold in this way, but then we've also got Powell's comments which are affecting gold in another way. And so these round up to create an overall macro outlook for gold, which is very bullish at the moment. Now, traders are now betting on the first rate cuts, which could come as soon as March next year, and that is very early in comparison to what was previously expected, with lower yields on US bonds also making other assets very attractive to investors, with the S&P 500 closing at its highest level since March 2022. And this was something I think either we commented on yesterday or we commented on last Friday, and it's very important to take note of, in relation to how well US assets are now doing and the potential of where they could go from here, with recent economic data being resilient even while inflation has been falling, thereby further boosting risky assets such as stocks. Now, the closure of two high-profile crypto criminal cases have also provided momentum for bullish Bitcoin investors, with the value of Bitcoin climbing more than a fifth in November. And this is what we were just talking about at the start. Now, such criminal cases included Sam Bankman-Fried, as well as the CEO of Binance. But despite that, Binance was not shut down to many, traders' applause and benefit, with Ethereum also being up by 8.3%, all the way up to $22,260 on Monday, which is its highest level since May of 2022. So very significant news on the Bitcoin and gold front. Obviously, we'll be coming to both of those assets near the end on the chart, so make sure you stay around so you see that, as we'll be analysing both of those assets and getting a good clear picture, not so much on the article front but now on the charts. But next article to talk about is US funding for Ukraine. Now, the White House has warned that the US is to run out of funds to aid Ukraine by the end of the year. Now, also saying that it was the failure by Congress to not approve of any new support for Kyiv. Now, we've been covering kind of US politics quite a lot as well, with us constantly kind of returning to talks of, Biden and his relations with Xi Jinping, as well as talking about Trump, his kind of criminal court proceedings and the things that he's always dealing with, as well as most recently, and I think quite importantly in relation to this to highlight, being, the overthrow of kind of the original House Speaker of Congress, Kevin McCarthy, and that created this kind of power vacuum where many Republicans were putting themselves up for the ballot to become kind of the leader of Congress and the House, the Speaker of the House. And from that, we actually saw a transfer almost of power from someone that was far more pro-Ukraine funding to a person that's far more skeptical. And we saw this with the Republican rebellion being including, mostly individuals which were more so against further funding of Ukraine. And so we're now in an interesting position whereby, Kevin McCarthy is no longer Speaker, and we're in this kind of new era of quite possibly, a Congress against Ukraine, or at least further funding of Ukraine, which is now creating this issue for the geopolitics of the world and also for the US. With the White House budget director submitting a letter to congressional leaders on Monday to make a specific assessment of Washington's waning support for Ukraine. And Joe Biden has requested $106 billion in funding for his foreign policy priorities, with these including Ukraine, Israel, and the Indo-Pacific region, with these being the key areas at the moment in which geopolitical tensions are highest. Of course, in Ukraine with Russia's invasion into Ukraine, of course with Israel with the conflict between Israel and Hamas, where they've now encouraged into Gaza, as well as the Indo-Pacific region, where of course there's this constant standoff between Taiwan and China, with fears always mounting that China will invade. Now, some lawmakers, in response to Republicans opposing support for Ukraine, are now trying to negotiate a bipartisan deal which would contain aid for Kyiv, but also new immigration and asylum procedures to reduce the number of illegal immigrants arriving on the US's border. But these talks appear to be faltering, with Republicans hardening their demands on immigration. And even if an agreement is reached in the Senate, it's unclear whether it can pass the Republican House, where Speaker Mike Johnson has been skeptical of funding for Ukraine. And this is coming back to what we were talking about earlier. The warning from the White House mirrors the issues also in the EU, where member states are struggling to reach a budget deal in Brussels to send 50 billion euros to Ukraine. So this is an important topic to keep on your mind when we're considering the geopolitical events at the moment. Declining US support for the individuals and nation states within these conflicts will obviously have a dramatic effect on the way the conflict plays out, as well as shaping up the US political scene. So keep your eyes on this most definitely. But that's all to talk about the articles. Next to talk about, of course, is the charts, where the first asset to talk about being US indices most definitely. Now, in yesterday's market briefing, we did talk about that strong strength of US indices, in particular the US 30, on last Friday of last week. And as well as that, we have kind of seen a bit of a continuation of that momentum on Monday, with this kind of movement but then decline actually. So we're in an interesting position here where US indices, off the back of the end of last week, have had that strong momentum to the upside, as people have been pricing in those earlier rate cuts for the US, and therefore we've seen this massive move to the upside. But going into this week, we actually have seemingly halted on the US 30, and so the question is, are we going to now experience a retracement? As after all, price obviously has taken a significant move to the upside, and often when price does make a significant move to the upside, we do see that retracement occur. And so if we just bring up the RSI here, we can see that quite significantly, is the US 30 overbought, with even tapping that 90 mark on the RSI. And so if we're still above this kind of overbought territory, how far and how long can we stay above it in a sustainable manner before we then see a sell-off to the downside? And if we do see that sell-off, where will we then stop off to end the retracement before continuation to the upside? So this is what we should be looking out for right now. Next to talk about though is the dollar, which has broken its channel. Now, in yesterday's market briefing, I did comment on how the dollar had been sitting in this kind of bearish channel. However, it had seemingly last week, coming into the end of last week, faked out and did a false breakout out of this channel to the upside before returning back in. But seemingly going into this week, we have found enough bullish momentum to actually break out of this channel once more and break above that false breakout that we've seen prior. So quite possibly now, we're going to be ranging, or in fact we'll be taking a move further to the upside. And so this is important to note, of course, as we could be forming a head and shoulders pattern, seeing a reversal, and that sort of thing, and see the entire environment for the dollar on the charts to change. As obviously we have seen this kind of bearish momentum for the dollar most recently as a result of, you know, those lower levels of inflation figures being released, as well as new economic data within the US being released, all, you know, hinting towards the US the US Fed cutting rates sooner than expected. And as we stated in the first article, you know, rates could be cut now as early as March, so very significant indeed. But what's interesting to see is we're not actually seeing that kind of continuation of bearish momentum, and we're kind of seeing, you know, price stall out. So keep your eyes on this. Next talk about though is Euro USD, which, you know, we did highlight yesterday could bounce off this 50% Fibonacci mark and in liquidity level, but previously we had also noted that breaking below this kind of area on the, you know, the charts could hint towards you know, a break in structure, and therefore invalidate, you know, lower levels of liquidity. And seemingly, you know, despite the fact that price had come into contact with a strong area of bullish support, price has continued to move lower as a result of breaking this structure previously and this structure as well. And therefore it does seem that we're now seeing a continuation to the downside for Euro USD. And the question is, where might price stop? And out of all places on the charts at the moment, you know, the 78.60 Fibonacci level is seemingly shaping up to be the only one of enough significance if price makes its way down to that level, which could see a bullish reaction from it. So definitely keep your eyes on this. Next talk about though is pound yen, which has now come into contact with this 78.60 level on the charts. It's hard to know where a pound yen is going. It's in a really kind of messy area at the moment. Obviously we had this bearish divergence on the RSI in comparison to the charts, which kind of hinted to us that, you know, things were maybe on the decline for pound yen. But most recently, you know, we have seen this kind of really clean bullish momentum for pound yen. But as you can see, in comparison to all this kind of price action up here, you know, down there, sorry, you know, in comparison to what we're seeing now, this is all very messy, all very choppy, and it's hard to really deduct where price is going. So keep your eyes on this. Next to talk about though is Bitcoin. Sorry. With Bitcoin obviously being in relation to the first article that we talked about, and is continuing to push higher going into today. And, you know, the question is, how much more bullish momentum does it have in it? You know, we haven't even seen any retracement since price started really pushing to the upside, you know, beginning the start of December, you know, 29th of November. You know, we've just seen this kind of bullish momentum to the upside. So the real question is, can price, you know, just stall out for a second? Will it retrace, or are we just going to be pushing until, you know, levels not seen since, you know, before the last Bitcoin crash? So keep your eyes on Bitcoin most definitely. Next talk about though is gold, which of course is in a very, very interesting position since it had such volatility yesterday. Now price you know, spiked all the way up and until near the 21,000 $2,150 mark, and I think what's important to look at on gold with you know, the current situation is by putting it on the weekly, we're able to see in the long term how price has been working out. And if we can see here that kind of volatility that we saw you know, yesterday, saw price go so far above any record levels seen before on gold. So very, very significant behavior on gold most recently. And so going into today, it will be interesting to see how price does react to this Fibonacci level of the 78.60 that I have drawn out here, as it is sitting on this strong area of liquidity as well. And so if prices, had that bullish momentum to the upside, the question is, where might it then go? On the RSI, we are seeing a bearish divergence, so keep that in mind, with, a kind of new high being made, but on the RSI, actually a lower high being made. So keep that on your mind, as we could be seeing a bearish reversal now. But overall, gold's in a very interesting position indeed. Lastly to talk about, though, is Brent crude oil, which has now broken below this counter trend line that we were seeing, and has now arguably tapped and neared this $80 a barrel mark, which we were expecting a retracement to. That said, we haven't quite actually seen that yet, so quite possibly price may actually come up and retest that area before continuing to the downside, as quite often on the charts we will see a break hook and go pattern form for price to make significant moves to the downside. So keep your eyes on oil. But that's all to talk about the charts. Lastly to talk about, of course, is the economic calendar, where we do have quite a bit of data coming out today. Now, firstly, we do have British retail sales data being released, as well as the services figure being released from Britain. As well as that, we will be getting Chinese business and services data coming out, along with the Aussie interest rate decision. So that's a high impact kind of data release, so keep your eyes on that. So as that, we will be getting the French industrial production figures, along with many services data within Europe being released, including the Eurozone, German, French, Italian and Spanish services data all being released. Along with that, we will be getting Spanish consumer confidence data being released, being released, along with US business and services data being released. And finally, we will be getting the US the US Economic Optimism Index figure being released as well. But that's all to talk about on the economic calendar. We've covered lots on the articles as well and lots on the charts. That's all from us at Wildwood Capital. I hope you have a great trading day this Tuesday, and yeah, see you later. Bye.